Views expressed are solely those of the speakers and do not represent this show or its team.
Anytime we get news or price action that comes in, whether it's positive or negative, right?
Yes.
We want to take a look at what that means for our thesis and whether or not there's a crucial leg of that thesis that doesn't support owning it or supports maybe buying more on weakness. And so that's what we're doing right now.
Welcome to Built to Last, conversations about wealth, work, and life. I'm Wade Lopez, and I'm joined by our Chief Investment Officer, Gary Aiken. Gary, welcome back to the show.
Great to be here, Wade.
Yeah, Gary, I want to open with one number, 25%. On July 14, IBM had the worst single day in its 115-year history, wiping out nearly $67 billion in market value. But the headline miss was relatively modest. Revenue fell short by less than 4%, and earnings missed by 8 cents. When the market reaction is that much larger than the miss, investors are pricing in something bigger than one bad quarter, right? So, Gary, let's start with the question our listeners are asking. When a 115-year-old company built on stability has its worst day ever, is that a real crisis, or is that a market that got ahead of itself?
I think in IBM's case, it is kind of a real crisis.
Mm-hmm.
This 25% drop came because, as you said, they had to pre-announce earnings when a number of large contracts for software sales did not materialize at the end of the second quarter, and really sort of towards the waning days of June, and caught the company off guard. And I think it's a real crisis in that IBM has been a company that has been able to forecast pretty well what its contracts and sales are going to be. And for material items like that to occur and then be blindsided by it, it is a pretty big crisis.
Well, let's walk through what actually happened, okay? Because most people saw IBM crashes and stopped there, right? But IBM released preliminary results 8 days early, which immediately told the market this was going to be more than a routine at earning this, right? So CEO Arvind Krishna then admitted that the company saw customer spending shift, but failed to adapt quickly enough. To me, that matters more than the numbers themselves. Customers didn't stop spending. They redirected the money from the software and consulting toward the servers, storage, networking, and chips needed to build AI infrastructure. The priority became securing the hardware first and buying the software later. That is why Microsoft, ServiceNow, and Salesforce also fell the same day. Investors saw IBM as a warning that spending priorities may be shifting across the entire technology sector. Gary, how unusual is it to see an enterprise cap spending reprioritized that quickly, and what does it tell you about where we actually are in the AI investment cycle right now?
Well, in the AI investment cycle right now, there has been story after story about two things: bottlenecks and shortages.
Right.
And the bottlenecks are in all kinds of different products, and from analog chips to just finding electricians to build things in data centers, to memory. And then this is where we get to shortages. And so there have been reported shortages of memory and CPUs and GPUs, and people going out of their way to pre-fund contracts to buy semiconductors and memory chips in the forward market. And so they're taking, what we assume is what happened is that a lot of these companies who were going to be buying, software and other services from IBM just needed to divert to buying GPUs and buying memory, and which is in a shortage condition, and we think that is what happened.
Well, IBM was also betting its new Z17 mainframe would be the strongest infrastructure launch in the company's history. Instead, infrastructure revenue dropped 7% for the quarter. What does it tell you when a company's own bet on the AI trend gets run over by the AI trend itself?
So I think that we have to separate for our audience who may not be sort of familiar with, what's really what we're talking about when we say Z17 mainframe, right? A mainframe is the kind of stable operating environment that you need when you're a bank, a large financial institution, and or something like that. Those are the main
Right.
buyers of mainframe solutions. The other place, if you don't want to have a mainframe that you can store all of your data and do all of your compute, is in the cloud. And one of the things that IBM does is security around cloud solutions and security around the mainframe. And so this Z17 mainframe infrastructure that is an upgrade from the latest, the Z16, is sort of the next generation of that mainframe. And the buyers of that for their banking customers potentially could be the Amazons, the Microsofts who manage other cloud applications in Azure and Amazon Web Services. And so we get
Mhm.
back to this idea that I don't think that what will happen ultimately is that the Z17 will be unsuccessful. It's just that I'm speculating here. If
Yeah.
if the main contracts were between the Microsofts and the Amazon Web Services, who would be normally
Yeah.
buying from Amazon, and they needed to divert those to NVIDIA and Micron to secure chips for GPUs and memory, then that would explain the big drop. And like we said, there's so much of a fluid situation going on right now
Yeah.
that it's possible that those companies too got it wrong and had to scramble at the end of June.
Well, let's talk about what has happened though, because HSBC's already downgraded IBM to reduce from hold. They cut their price target from 231 to 190ish. Other analyst targets on on this IBM range is from anywhere as high as 375. That's a 96% spread between the most bearish and the most bullish reads on the same company. What does that spread tell you about how unsettled this picture is currently?
Yeah, I think, analysts on the street tend to have different time frames for their forecasts.
Right,
The most
right.
typical one is a 12-month forecast. But I think when something like this happens, some analysts are scrambling to update their models very quickly, and others take a longer approach. And so the difference between the highest and the lowest on the street could be a matter of some analysts moving quickly and some analysts taking a little bit more time to digest the situation before
Yeah.
moving their price targets around.
Yeah, and the full result, what lands on the 22nd of this month. What are you watching for specifically on that call to know whether this was a timing problem or an actual real demand problem?
Yeah, I think I'll be looking for the questions that are going to be along those lines from analysts who are on the conference call, and also to get a sense from IBM, whether or not they are seeing serious issues with respect to software and consulting.
Yeah, yeah, I agree.
We've seen infrastructure. IBM has four main business lines.
Yep,
Software and consulting sales is one. Uh, Infrastructure mainframes is another. And then compute is a third. And then the final is sort of financing.
right,
And the
right.
two middle ones that I mentioned are both growing sort of mid single digits to high single digits in terms of revenue, and low or high single digits to mid teens in terms of profitability. Software sales and consulting has been the one that's been trailing off significantly, and it's something that I think will be a focus for whether what management really expects from that going forward, given
Yeah.
that
Yeah.
that's what being really disrupted by AI.
Yeah, let's touch on that a little more. It's IBM's, is primarily a hardware company. Hardware is not where it makes most of its money, right? I mean, it's just software represents, like you were talking about 45% of revenue, but nearly two-thirds of the profit. So when you look at gross margins above, approximately 80%, the hardware is really just the doorway, right? It gets you in. It gets IBM inside some of the world's largest companies where it can build decades long software and service relationships. Now think about that, because this is why the full picture matters. Margins improved. Red Hat grew 11%, and IBM's generative AI business surpassed almost 13 billion, 12 and a half, I think. Market focused on one disappointing quarter. It paid far less attention to what IBM is building for the next decade. So I think when you look at those, Gary, what is the profitable part of this business? That's still growing and operating margin is. Why did if that's happening, right? If we're getting those things, why did the stock get a cut by a quarter in a single session? I mean, it doesn't make sense.
No, and it doesn't have to make sense. We know that one that in recent weeks the single stock volatility, and I think we maybe talked about this on a previous podcast, but single
Yeah, we
stock
did.
volatility has gone up dramatically. And so any move that's unanticipated, any move that is happening with individual stocks, especially in the tech sector, are going to be more dramatic than they otherwise would be. Um, Secondly, anytime you pre-announce bad things, the first move by traders is to sell. And
Right,
when there are no, buyers on bad news, the price can go as low as it
right.
needs to go to clear the market.
I've never thought about that.
When the
Yeah,
dust settles, we'll have more information and we'll figure out what's going on. But for the as we're looking at the stock now, we bought it for our clients at basically this price 2 years ago, and
yeah.
so it hasn't really moved very much. There's been it moved up a lot, and then it's with this move it's come right back down. A 25% drop in a single day is definitely out of the ordinary, and it's why you need to have a diversified portfolio, so that one single stock doesn't take down your entire net worth.
Let's walk the listeners through why a hardware slowdown threatens a software company. Does a pullback in infrastructure spending actually put the high margin software engine at risk, or does that kind of get overstated by a market reacting to headline forecast that reads the segment data?
My thinking on this is that the software and sales business is being separated. That the old model, like you said, was you buy the hardware, you buy the
Hmm.
consulting services around the hardware, and it's a long-term project. And of course, there's that old saying, nobody ever got fired by going with IBM. Um,
Yeah,
I'm not sure. I'm not sure that anybody who's you know uh, you know 5 or 6 years younger than us has ever even heard that phrase.
yeah, yeah.
Um,
It's the first time I've heard it in a long time.
yeah,
Yeah,
that for a long time that's what IBM was, and I
yeah,
think it's a different. The reason we've got another reason for this 25% drop is a market realization that maybe there's something fundamentally different about this IBM that is not necessarily solvable in the ways that we had thought about it, and we really need to think about not thinking about this business as a conglomerate of these different
yeah,
parts of the business that all sort of harmoniously work together, but
yeah.
as separate and distinct businesses that maybe have less to do with each other than we thought.
Let's draw a line between a timing problem and demand problem. If if the delayed deal that CEO mentioned showed up close next quarter, this was a timing thing, right? If they never show up, this is a demand. How do you tell the difference before you before the company tells you.
You can't.
Yeah.
You can't. I mean, that's the tough part about this, and why
Yeah.
I think there was a lot more selling is
Yeah.
that, hey,
That makes sense.
a lot of why we buy a stock, right, is confidence in management and management's ability to make good decisions and to forecast their own business. This was a shock, not just in losing a contract and not having revenue be exactly where we thought it was going to be, but
Yeah.
also an indictment of current management's ability to really understand their business and their customers.
Well, do me a favor, and just quickly rate his message in your opinion. What'd you think?
I would rate it pretty poorly. I think you and I still have a lot of questions
Yes, we do.
that we can't answer on this podcast, and I don't
Yeah.
think anybody can really answer
Right.
them. And we're all waiting until the conference call on April 22nd to ask more questions. And
Absolutely.
and so with that regard, I mean they really didn't tell us a whole lot of information that made a whole lot of sense. And from
Yeah.
analyst reports that I've been reading,
Yeah.
in the days since, there still isn't a whole lot of
Yeah.
clarity on what that statement really meant.
Yeah, there's two groups listening right now, right? You got the investors who own IBM and wondering what to do, and you have business owners watching this from the sideline. But both should pay attention because this is bigger than IBM, right? It's a lesson in what happens when customer priorities change faster than a company can respond. I think it's a little bit of a CEO problem, in my opinion. So whether you're managing a portfolio or running a business on Main Street, I think that's something we have to address when we're looking in the future. So, Gary, for a client holding IBM right now, what's the responsible way to think about a 25% single day drop? Reassess the thesis or recognize the market may have overreacted and just wait for July 22nd? What are you doing?
We're reassessing our thesis. Anytime we get news or price action that comes in, whether it's positive or negative, right?
Yes.
We want to take a look at what that means for our thesis, and
Yep.
and whether or not there's a crucial leg of that thesis that doesn't support owning it, or supports maybe buying
Yeah.
more on weakness. And
Yeah.
so that's what we're doing right now.
So, is there a broader read here for anyone running a services subscription based business? I mean, if you think about it, if large enterprise clients will delay a software renewal to chase scarce hardware, what does that say about how fragile or even sticky high margin recurring revenue can be when capital priorities just shift?
I think there's a couple of lessons to learn here. One lesson is that as this AI revolution progresses, there's going to be more fluctuation, not less,
I agree.
around what it is, what it means, and that means that there's going to be a lot more nimbleness and a need for more nimbleness
Yeah.
around management. Um, we're going to have to take, or managers of businesses are going to have to take risks. They're going to have to realize that there may be some things out of their control that
Yeah.
they're going to just have to deal with. And so risk management from that perspective, both positive risk and negative risk, are going to be things
Yeah.
to think about from a management
Yeah.
perspective.
Well, let's expand on that. What does the broad, software sector sell off on the same day tell you about how interconnected the market considers enterprise tech right now, even when the individual companies had not reported anything?
I think it means, and what we expect it means, given that we reduced our software
Yeah.
exposures across the board
Yep.
earlier, was that the demand for AI hardware, or demand for hardware to support additional AI capabilities, means that those AI capabilities are providing huge in-house or compute
Yeah.
solutions to software problems that were previously addressed somewhere else in the software ecosystem.
Agreed.
And
I agree.
and if people are rushing to divert resources to additional compute For AI solutions, it means that they are probably thinking about or actively reducing their dollars that they're committed to spend for legacy software.
Yeah, but here's the part of the story I just have I keep coming back to it because I think it applies to every business I own and every business owner listening today. IBM was not blindsided, right? Krishna said that he basically he made a mistake, right? They saw the shift in customer spending. The problem was not the way they missed it. The problem was that they didn't respond fast enough. And to me, that's an important distinction, right? Missing a trend is a strategy problem. Seeing the trend but moving too slowly is an execution problem. Those are two very different things. In many ways, execution is the harder problem to solve, right? Strategy can change in a boardroom over the course of an afternoon. Execution requires changing how an organization makes decisions, reallocates capital, reprioritizes projects, and gets thousands of people moving in the same direction. That's a much harder thesis, especially in a company the kind of history that IBM has, right? And I think there's a lesson in that for every business owner. The market usually gives you signals before it gives you consequences. The real question is not whether you see the change coming. It's whether you can act on it before your customer forces you to act on it yourself or they throw a decision down your throat, right? So, Gary,
Yep.
from an investment standpoint, how much of a company's long term value comes down to exactly that, right? The distance between recognizing a shift and actually moving on it, in your opinion.
Yeah, the knock on IBM in the past was that it was a extremely staid, old line,
Yeah.
bureaucratic organization, had not recognized shifts in the technology business
Mm-hmm.
and was not really executing on its ability to do that. And I think what one of our assumptions in our thesis was that this was a company that had figured out that that was
Yes.
wrong. It had
Yep.
made some excellent acquisitions,
Yep.
to move IBM towards the present in order to move towards the future. And so this was a real shock
Yeah.
because it seems like that institutional inertia is still lingering there in the background of IBM.
Absolutely. It almost feels like history repeated itself, but if you had to name one thing every business owner should take away from this, this is a 115-year-old company getting caught flat footed by a trend it saw coming. What would it be?
Yeah, I would say spend more time with your customers.
Excellent, excellent answer. Yeah.
We all sit behind our computers and all that kind of
Yep.
stuff. I think getting out, having a meal with your customers, picking up the phone and talking to them on a Saturday or a Sunday afternoon,
Yep.
when there's nothing else in front of them,
Yep.
that maintaining those relationships are really important.
Yep.
And I don't know that that's what happened here, that IBM
No, it's
lost
speculation. I agree.
it's all
I agree.
speculation, but I think for business owners and
Yep.
for anybody if you have a sales problem, you need to go back to sales 101.
Yeah.
And it's a people business, it's relationship management and staying in front of your customer. They're more likely to tell you what's really going on.
Yeah.
And that can help you either solve a problem that they didn't know they had. You can be solutions oriented, or at least have a heads up that something is coming that is out of their control.
Yeah. It's like any sporting event. Sometimes you can just feel the momentum shifting if you pay attention to it, right? So, okay, let's bring it home. You know what? We know what we're getting ready to do. I'm going to ask you three really tough questions, and I guess the big thing we want to try to keep it, Jen. If let's talk about companies. We talked about profitability, growing core business. That one of the yeah, it's been around forever. That just had the worst day in its history, right? So the first question is, what is the single most important thing that matters right now when it comes to how investors should think about IBM specifically? And I would say more about enterprise tech more broadly?
I think the one thing that investors should think about, and the one thing that we're going to be thinking about is the sum of the parts greater in valuation than the value of the business as an ongoing concern. I think
Okay.
that sum of the parts valuation is going to be really important.
What are you watching for? I talk about next 6 months, but really we're talking about in a few days. So what are you watching for on July 22nd when the earnings comes out? Just to remind everybody, and over the next 6 to 12 months that every person should be thinking about or have on their radar. Let's talk about after that report comes out.
Yeah, after something like this, I want
Yep.
clarity and visibility.
Yep.
And
I
I don't
agree.
care if it's negative. Give me the bad news.
Yep.
But I want
Yep.
clarity and visibility.
Yeah. And finally, what's the one thing investors need to avoid right now when it comes to reacting to a headline like this one?
I think this is a crucial example of why you don't put all your eggs in one basket. Even if you're diversified amongst tech,
Yeah.
that's still diversification.
Yeah.
Diversification is crucial.
Yep. Agree. The noise around a drop like this is loud. Most of it, treats a 25% move as proof of a story rather than the start of a question. What actually matters is whether the deal IBM says got delayed shows up next quarter or never shows up at all. We will know more after the 22nd. What does not change, regardless of what that call says, is the lesson underneath it. Seeing a shift coming is not the hard part, right? Moving on it fast enough. That is true for a 115-year-old technology company, and it's true for every business represented in this audience. If today's conversation raised a question about how a move like this affects your own portfolio or how it connects to decisions you're about to make inside your company, that's exactly what our team at Concord Wealth Partners is here to help you with. Gary, great conversation as always.
Thanks, Wade.
And that's exactly why we call this Built to Last. See you next time.
This podcast is produced by Concord Wealth Partners, LLC, an investment advisor registered with the Securities and Exchange Commission. Registration does not imply a certain level of skill or training. The information presented is for educational and informational purposes only and should not be construed as personalized investment, financial, tax, or legal advice. Nothing discussed should be considered a solicitation or offer to buy or sell any security or investment product. All investing involves risk, including the potential loss of principal. Past performance is not a guarantee of future results. Individual results will vary based on personal financial circumstances, risk tolerance, and other factors. Concord Wealth Partners does not provide tax or accounting services. Tax and accounting services are offered through Concord Business and Tax Advisory, an affiliated CPA firm. For more information about Concord Wealth Partners, including our Form ADV Part 2A and Form CRS, please visit concordwealthpartners.com or contact us at 800-838-4370.